Today's episode of Hidden Forces is made possible by listeners like you. For more information about this week's episode or for easy access to related programming, visit our website at hiddenforces.io and subscribe to our free email list. If you listen to the show on your Apple Podcast app, remember, you can give us a review. Each review helps more people find the show and join our amazing community. And with that, please enjoy this week's episode.
They had a chance to choke me out, but they didn't. Said, oh, Warren Buffett said out on the airlines? Is that what Warren said? I want to know everything about these fucking planes. I'm doing my own research. I don't depend on 94-year-old guys who live in fucking Nebraska. I want to know everything about these airlines. Get me the information. I went to work. Pen to paper. Pen to paper. I said I like the airlines. I said the airlines are depressed. I said Amelia Earhart. Bang. The Wright brothers. Bang. We fly in this country.
What's up, everybody? That was David Portnoy. If you don't know who he is, don't worry. I'm only a week ahead of you. I've been playing that video non-stop since it came out. It is literally the most epic hype video I've ever seen for trading stocks. Nothing encapsulates the rip-roaring retracement in equities that we've seen in recent months better than that video. And I only played you half of it. We are in serious trouble. Our markets aren't just totally disconnected from reality. That happens from time to time. It's a normal part of the business cycle. Markets today have no relationship to reality. Literally, none. There's no relationship between this stock market and the real economy. Even the premise that stocks are driven long-term by fundamentals and earnings has been totally discredited. And don't take my word for it. Look at Hertz. It's been selling newly issued shares of stock while it's in bankruptcy. They're literally liquidating the fleet to pay creditors who are senior to the equity. The equity's worthless, and yet people are buying it. It's totally insane. And honestly, it's not all that surprising. Every time the market drops, the Fed prints. And eventually, the market goes up again until it doesn't, and then the Fed prints again. This has been going on for over a decade now. The relationship is Pavlovian. It's a behavioral response function that's embedded in markets at this point, and it's destroying our economy. And eventually, it's going to destroy our society. A free and open democratic society is fundamentally incompatible with a Ponzi economy financed by endless sources of credit and backed by skyrocketing asset prices. You can't allocate more and more of the nation's wealth into fewer and fewer hands with every credit cycle and expect the electorate to just roll over and take it. It doesn't work. We're in danger of a real political crisis in America, and I just don't think it's being properly priced into markets at this point. When I watch David Portnoy go on these epic rants to his millions of fans, or when I get sucked down some dark internet subreddit or go through snapshots of people's wrecked Robinhood accounts, it feels like I'm in some kind of nihilistic, masochistic meme park full of people who got left behind during the last 12 years of economic recovery. And I can't help but wonder if this sentiment that we're witnessing is a leading indicator for the type of political unrest that will eventually put an end to this failed experiment of central banks trying to ignite the real economy by focusing exclusively on raising asset prices to the detriment of everything else, including the very economies that they claim to want to support. In the meanwhile, the rest of us still need to figure out how to invest around this insanity. And that's something that my guest, Tony Greer, editor of the Morning Navigator newsletter and founder of TG Macro at tgmacro.com, is here to provide. Although this is a conversation about much more than just investing, we are going to spend a good amount of time on exactly this. And so I'm obligated to make absolutely clear that nothing that I say during the course of our conversation can or should be viewed as financial advice. All opinions expressed by me and my guest are solely our own opinions and should not be relied upon as the basis for financial decisions. And with that out of the way, I want to welcome my guest, Tony Greer. Tony, welcome to Hidden Forces.
Hey, Demetri, I'm really honored to be here. Thank you.
It's my pleasure having you on, man. How you doing?
I'm doing great. Watching these crazy markets, right?
Yeah, so it's Tuesday morning. The market's just opened, and it's actually unusual even for me to do recordings during market hours, definitely for an episode that deals with markets. I imagine it's pretty unusual for you not to be actively trading at this time or be focused on the market in real time.
Yeah, but I mean, I'm still focused on it. As long as I'm watching it, I'm cool. I took care of any of my action items before the market, so I can kind of leave everything on autopilot for a little while. I'm here in case of an emergency, you know?
Yeah. So look, I mean, I've heard, you and I have had a number of conversations before this. I first heard you on TC's Chartcast with TC in Georgia, and it's a great conversation. You give a lot of your background for listeners who are interested in learning about, where you came from and how you got your start. It's super interesting. But you're a markets guy, and the markets are kind of front and center right now. We've had this enormous recovery in asset prices since the lows in March. You made some really great calls at the interim top last time, as well as at the bottom that we recently had in March.
Thank you.
And I just thought it would be great. Absolutely. So I just thought it would be great to have someone like you on the program who deals with this stuff on a regular basis. And maybe we could just have a kind of long conversation about what the hell is going on.
Yeah, it is a long conversation, Demetri, right? We've come such a long way, from the 30,000 foot up view from, when I started off in the markets and they were much freer than they are now to, this sort of centrally planned markets where central banks are involved in every market and, really guiding asset prices really, really sharply.
So what do you think? How do you make sense of what we're seeing? Because I can give you my sort of macro take that, peppers in my sort of experience following markets as an outside observer, certain philosophical insights, political insights. I try to, take a macro view. But I'm curious, as someone like you who's a tactician, who's been on trading desks since 1990? You got your start? Yeah. So, I mean, I'd love to understand how you see this, and maybe you can also give us a sense of how markets have evolved during your time watching them and trading them.
Yeah, that's really interesting, Demetri. I feel like going into the evolution, we should start with that a little bit because then it'll really clear up what's going on now. When I started off in the FX markets in 1990 on the 107th floor of the World Trade Center at Sumitomo Bank, I'll never forget the day in 1992 that I walked in, and it was that famous day when the Quantum Fund was breaking the Bank of England. And what that meant was the fund run by George Soros and Stan Druckenmiller was offering the British pound cheaper than the Bank of England was bidding for it in an attempt to get them to stop bidding for it and break their price and get the pound to go lower, which is the way that the Quantum Fund was positioned. So I like starting with that story because back in the day, that was literally a hedge fund against a central bank. And today we have the exact opposite, where the central bank has got everyone's back and everyone is trading in front of them and going along with their objective. So I think that, since we've evolved, it's important to understand that this major player in the market is now who everybody has to keep their eye on, where markets in the past used to be much more fundamentally driven. And, there were all different types of strategies that existed on honest fundamentals and economics. There were bond yield. You could trade bonds versus what you thought the economy was going to do. You could trade equity growth stocks versus value stocks and cyclicals versus non-cyclicals. and they all had a different performance, component to them. And, nowadays with Federal Reserve, just pouring liquidity into the markets, it's just, everything is up and to the right in sort of, similar denominations. But what I think we're seeing right now is I'm sticking with my plan, Demetri. The sell-off that we just saw, and obviously I'm talking about from February to March, where the S&P collapsed from 3,400 to just below 2,200. That was the Godzilla of all sell-offs. Other sell-offs could be regarded as literally like, a quarter of the size of that. It was the fastest sell-off to a bear market. It was the fastest 10% correction in history.
It was the speed and size combined that made it such a Godzilla move.
Exactly. And there was some historic diagnostics within that where, I like talking about and watching the tick index print, which sort of measures how much the bid versus the offer is trading on the stock exchange. And in that slide from late February to mid-March, we had 11 out of 14 days were enormous tick index prints on the downside. And we used to be in a scenario where you would see one or two big tick index prints on the downside where everyone is hitting bids. And that would be the end of the selling. And the markets would recuperate from that and sort of, get back on their feet. And this particular episode in February and March, it was just one after the other, one liquidation by one fund into the liquidation of another one. And that was literally the most destructive market trading I've ever seen in my life.
So that gap gives you a sense of forward momentum?
Yeah. So that's sort of, that momentum down, having lived through the dot-com bubble and lived through the great financial crisis, you remember that the crashes in those markets had all kinds of crazy retracements to the upside. Now, I said right away, once this market leveled off on the downside and we got Federal Reserve liquidity and emergency funding to the rescue, I said, once we bounce now, we are going to have an utterly blinding retracement rally in response to this really, really severe sell-off. And I think that that's what's manifesting in the market right now. The S&P got back up above all major moving averages. We topped out at 3,200 last week, and we sort of had that episode where there was so much bullish sentiment around that we were just looking for a reason for the stock market to back off. And then we got the Federal Reserve last week where, Jerome Powell didn't really give us anything new. He rather reverted to saying that there weren't going to be any rate hikes in the near future. And everybody's looking at each other saying, are we talking about rate hikes? Why were we even talking about rate hikes? And so the market passed out after that. And so now we're sort of getting back on our feet and we're trading back and forth in this range that's below the highs. But we're seeing all these crazy, crazy speculative developments again.
So is the reason for that level of dislocation or the gap down, what does that say about that people were waiting, expecting, hoping for the Fed to say something, that the market can't support itself?
Yeah, I think that that was the tape dealing with the optics of shutting down the economy for the first time ever, right? And I think that that's why you had a historic sell-off.
In March.
Exactly. In February into March. Exactly. Yeah. We shut down the economy in March. The market began selling off ahead of that, when we finally realized that COVID was in fact going to hit the US and be extremely impactful. Whereas weeks before that, we were doubting that it was even going to come here, or at least some people were. It was very difficult to figure out for a certain period of time. And then, when the market finally bottomed at 2,200, you see the Federal Reserve come to the rescue. And that's where everybody has to now go back out and cover shorts and decide what the real price for the S&P is. And I think we're still trying to find that out.
When to go back to something you said earlier, you mentioned being on the other side of some of those trades that were happening with Quantum Fund in 92 when they broke the Bank of England. We had Robert Johnson on the show, which is episode 17. He worked at Quantum Fund at the time under Druckenmiller and Soros. And I really love what you said. It kind of stuck out to me that you're right? Like Robert Johnson, Stanley Druckenmiller, Soros, Quantum Fund, they were trying to get the market to come in on their bet. They were making a bet against the central bank. Mm-hmm. And now central banks are making a bet against the market. It's like this game of chicken.
Yeah, very well put. Yeah, because, the central banks are changing the way that we look at the market by, expanding their balance sheets to what has just become, a new astronomical level. And that liquidity, as we know, finds its way into the markets, and it creates all kinds of distortions from, from the bankruptcy stocks rallying to, Tesla rallying to absurd levels. And, you see all sorts of societal overflow from there as well. But, this is something that the Federal Reserve is really, really, they're going to be grappling with this for a long way to come, because I don't know what the exit strategy is, Demetri.
Yeah, man. Now the most recent announcement was that as part of their bond buying program, they're going to also buy individual securities.
Yeah.
Which was, again, I guess the market took it as another bullish sign. This is a thing where I feel like, I've told you this before, it makes me think of what Colin Powell told George Bush in 2002 about Iraq, that if you break it, you own it. And I feel like, they've broken it. They've broken the economy, and they own it now.
Yeah.
And I'm not sure that they believe that what they're doing helps, but I just feel like they know that if they stop doing it, the economy will fall apart.
Oh, I agree with that. And I think more importantly,
or markets will fall apart. Yeah, markets will fall apart.
That's where they've got a very clear and consistent angle on keeping that feedback loop alive. I feel like they've still got the New York Stock Exchange floor set up as a TV studio. We've got
totally crazy.
Right?
That's what a great insight. Yeah, what a great point.
Yeah, and we've still got Jim Cramer, who I love for his enthusiasm, coming on after the bell and telling people where they should be. And then we've got Jerome Powell on 60 Minutes, uttering quotes that make people that have been in finance for a long time cringe. Like he's got the host asking him, where does this money come from? And Jerome Powell with a straight face says, we print it digitally. Right. And it's like that's not supposed to shock the world. Right. That's just a little comment I made on TV. We print money digitally. And it's like, oh, man, if you don't take that as a sign that you better be making some moves to protect yourself, you're not paying close enough attention.
Yeah. So that's going to be my next question to you. But, you mentioned Jim Cramer, and that makes me think about like his next level derivative, El Presidente, the Barstool Dave. I want to talk about him, but actually, we could talk about him now as part of this larger conversation about sort of the retail investor and Robinhood, or we could talk about him later. But the other thing I wanted to ask you is, how does someone protect him or herself? How does an investor do that?
Man, it's really hard, Demetri. You can either choose to go along with the party line, which is like buy the index.
Yeah, which
the Federal
by the big.
They're trying to say, essentially the big picture is they're trying to push you out the risk curve, right? They've taken away your zero risk savings account, right? There's no more zero risk. We'll give you 5%, 10%, whatever it was in the last, 20, 30 years. That's been grinded to zero. So there's no more saving available. So what are you going to do with your money? You can put it in a commodity like gold, which, gold is supposed to be a store of value where you're not really expecting it to go run away on the upside or collapse on the downside. Your gold price is supposed to be there when you get back. So you've got that option. You can pile into the S&P for sure and say the Fed's always got my back, which we're now concerned about. As we know, that's gotten all too popular strategy. You can decide to put your money into there seem to be other precious and industrial metals that have been rallying alongside this new wave of monetization.
Well, what have we been seeing in like commodity markets? How have precious metals performed during this time?
Well, we're having another run at a great bull market in gold. This one seems to be a lot steadier and much more driven by the play against the central banks, right? As the central bank balance sheets expand, people are investing in gold, thinking that they're buying the only real currency on the block for when these other fiat currencies potentially devalue or continue to devalue. So the gold market's picking its head up again. We haven't reached the 2011 peak yet, but, I think that gold is probably going to be north of a $2,000 item. The thing with gold now, though, Demetri, is that there's no supply or demand shock story that should make gold go up. Gold is going up because people are putting money into the commodity, right? The total assets in gold ETFs continues to grow, and that's why the price continues to be sustained. So that's more of a popular investment that's a play against central banks rather than, say, when you're buying copper because there's dwindling inventories and the price is going higher and the exchanges are getting tighter. That's a much different play. That's a physical commodity play, whereas this is more of a play against central banks. So the commodity markets have been interesting. As you know, the oil market has been wildly fascinating with that episode that we had in negative prices that people thought was going to stick around for some period of time. And we managed to get bullish, during that move and trade energy from the long side. And so, once again, it's just this world of distortions. And, more than ever, every trade has got to operate on its own merit.
Yeah, one of the other things that I've been saying lately, because I think everyone sort of interprets a rising gold price as inflationary, and it certainly can be in nominal terms inflationary, but a rising gold price, as well as this phenomenon of people taking their stimulus checks and using it to buy shares of a company that's in liquidation, like Hertz, those things are profoundly deflationary in real terms. That doesn't actually create capital formation. No. That doesn't actually grow an economy, right? If you put your money into gold or you buy the stocks of a company that's liquidating its business.
Very much in the same way, Demetri, that the Fed's actions of quantitative easing aren't creating jobs, right? In a very similar way, you're addressing, one issue, with your resolution that isn't necessarily going to resolve the problem. We're throwing the same answer at this massive unemployment problem caused by the lockdown as we threw at the great financial crisis, which was caused by, a seizure of liquidity, and a seizure of lending. So they're two totally different problems, and we're dealing with them with the same quantitative easing program. And so I'm interested to see how this shakes out. But I think that what the market is telling you, with the gold price propping up and even with cryptocurrency coming alive again and making a run for 10K, I think that the market's telling you that people want an alternative to fiat currency.
So do you think that's a play? Like, crypto and gold and anything that people perceive to be a safe haven asset that can provide either protection as a store of value, but also potentially a medium of exchange in the future?
I do. I'm a believer in cryptocurrency. I did jump off of the boat as a trade during the COVID risk crash because I saw volatility in equities pick up, and that's where I like to spend my time focusing. When that casino is rocking, I like to be there. So I jumped off the crypto boat. But I think that crypto is elbowing its way into the macro landscape. Do you know what I mean? Where capital flight from countries, when you see capital flight situations like we saw in Hong Kong, like we've seen in Venezuela, you tend to see cryptocurrency go bid, right? And it doesn't tend to be as stable as, say, a gold price or a gold rally because, there's a lot of different factors in cryptocurrency trading, but you'll see it go bid. So I feel like it's elbowing its way into the macro landscape as something that wants to be considered like gold, like a currency. And so I think it's going to be around. What price it's going to be around with us, I don't really know.
So how long do you think this rally is going to keep going? Or maybe is that the right way to ask the question? Like, how would you
that's
answer
a totally
that?
fair way. I am continuing until proven wrong. I am going to continue to play it like we are sort of in the last innings of the retracement rally, which was a response to the lockdown, right? So we had the big, huge Godzilla sell-off. We expected some kind of an absurd retracement rally. And I would say that with 20% unemployment, or we'd call it 15% unemployment, PMI sinking below 40, all kinds of structural damage to the economy, that the S&P is still probably overvalued here. But you've got to consider the other side of the coin. The Federal Reserve is going to bring aggressive and forceful action in terms of propping up the markets. So that's the other side. But I still think that this is a good time to touch on Davey Daytrader, because he seems to be a sort of product of this absurd retracement rally, right? Like, he jumped onto the boat with everybody else that was probably betting on sports or something else to keep their time, occupied. And now they've pointed their energy and their interest at the stock market. And so now we've got this class of, Davey Daytrader and Robinhood traders that were otherwise not participants. And it's probably starting to make up a reasonable driving force in the market, just like we saw retail become a reasonable driving force in the market during the dot-com bubble. So, when you see somebody like Dave Portnoy, who I firmly believe is a genius and I'm a huge fan, but, when you see him walk into an otherwise, gentleman's market and kick the table over and say, I'm the king, I'm the captain now, you tend to say, okay, buddy, we'll see how long this lasts. I'm rooting for you, but it's not going to end well
for him. Tell our listeners who he is, because a lot of them are not going to know. I didn't know who David Portnoy was until our mutual friend TC told me about him. Like a couple of weeks ago, he kept saying like this guy, Davey Daytrader. I was like, I don't even know who you're talking about. I'm busy working on an episode
something
on like,
serious,
you know,
right?
flight
That's something
simulations.
that makes more sense.
Yeah.
And so then the next thing you know, he's literally the founder of Barstool Sports, which has elbowed its way right into mainstream media as sort of the anti-mainstream media. He formed this website for the common man, by the common man. That was his motto. And he wanted to cover sports and chicks and everything that was popular flying around the internet.
He has this thing called the Smoke Show where they evaluate the hottest women.
It's juvenile, right?
Yeah, it's like goes back to the point about retail.
Exactly.
Bro. It's very bro-y.
He's the epicenter of bro-y, right? He's the every bro. We used to have the everyman character. He is every bro character because he's like your best friend sitting next to you at a bar, and except he's willing to be there all day long with a camera pointing on himself. So
yeah, totally. He's the guy at the pancake house at like 4 in the morning who's like killing you.
But you're okay laughing at him, so he's got that kind of a presence. And now that he's stepped into the equity market and, identified that airlines are cheap and Buffett jumped out and there's a new boss in town because now airlines are rallying. And, he's got Penn Gaming, who's got a stake in Barstool Sports that he was trading that from the long side. That was rallying, making him a richer and even more, gregarious beast online. So, this is clearly symptomatic of excessive speculation. And the thing that level-headed traders can't get their head around is how is this level of speculation returned in the immediate wake of a government shutdown that's going to have, prolonged effects on our economy. So it's a question of whether or not you want to buy into the Fed trade or not.
Okay. So a couple things. One, people got to check this guy's stuff out. The airline stocks, his play on airlines, and this hype video he has where he says, Warren Buffett sold the airlines. I want to know everything about these airlines. We fly in this country. That hype video, I've never seen anything like it. But you raised the question, which is how is this type of mania returning to markets at a time when the economy is shut down and when risk is everywhere? How is this? Explain that to me. What are we seeing?
I've been calling it financial postmodernism, Demetri. And I call it that because, we just came out of a scenario where as we were getting the actual read on what the lockdown did to the economy in those literally ghoulish economic data numbers, the stock market was putting in massive upside rallies, right? And it was rallying off of the lows and it was rallying off of a spike low. So it looked even more obnoxious that, Wall Street is celebrating while Main Street is getting crushed. And that was sort of the new dichotomy that happened right through, through April, May, and right into June, where, you're getting an economic data point on Friday of 9 million people unemployed and non-farm payrolls, and you're getting the S&P up 6% in the same day, against the headlines of Dow up 1,000 on CNBC. And people are like, what the hell's going on here? Like, what does Wall Street not care? Does the market not care? And it's because they're not pricing in the fact that the Federal Reserve is out there jacking its balance sheet from $4 trillion to $7 trillion, inhaling corporate debt now on the way. They're going to be inhaling individual issues of corporate debt now, and they're going to be supporting that market. And it's going to be wild to see how they go ahead and support that market while these companies' cash flow gets diminished and their credit ratings probably get knocked down a couple pegs. So I don't think anybody knows how that credit market situation is going to play out. But, you're seeing funds get set up as we speak to try to front run the Fed buying in corporate credit. So it's another sign of excessive speculation and one that makes me nervous about the equity markets at this level, but I could be crazy.
Well, I've referred to this phenomenon as market nihilism. And I would direct listeners to one episode that we did with Ben Hunt and Grant Williams, where the title was Market Nihilism, Price Discovery in a World Where Nothing Matters.
Yeah, that was great.
And Dave Portnoy, one of those quotes that I put into my rundown, which is, I think, one of the better rundowns I've done in a long time for listeners who are subscribers. Definitely check it out. He says, it took me a while to figure out that the stock market isn't connected to the economy. And I think this is, again, like we've always known that markets can sort of, exceed fundamentals, get out of whack with fundamental reality. But we've always thought about markets as somehow related to reality. Mm-hmm. And I wonder if we're kind of at a point now for the first time, and it's always dangerous saying this, right? Because it's very easy to say, like, we've never seen this before.
Mm-hmm.
But have we ever seen before a market where the bull market narrative is that reality is irrelevant, the economy doesn't matter, the only thing that matters is government printing, the Fed, the market always goes up. That's another thing that Portnoy says. So just buy. Just buy. It doesn't matter. Price doesn't matter. If you have money, put it in the stock market because it'll be higher tomorrow.
Right. That is you nailed it. That encompasses what the sentiment is at this exact point in time. And as we know, all right, like that's what's driving it. We know that feedback loops can go on for longer than anybody thinks they can go on. And I think that that's what we're seeing in front of us. In addition, Demetri, I feel like, the Federal Reserve's policies have clearly created an extension of the wealth gap division in this country. And so their most recent enormous step into a new level of QE and a new high in their balance sheet, that's exacerbating the wealth gap even more. And I feel like sometimes that's what the stock market is actually expressing. It's the stock market saying, look, the 1% are getting rescued out of this by the Federal Reserve. The Federal Reserve is expecting it and hoping for it and praying for it to trickle down. But the reality is they're not going to own up to their policy being the reason for this problem. And so if that's going to be the case, then there's always going to be a deception going on. And that's for me where it gets really, really dangerous and more difficult to trade.
Yeah. I mean, this thing, man, it's something I've thought about a lot. I've started writing about it and I've talked about it on the show. It feels like we've really embraced the simulation. We've totally decoupled from underlying reality. And everyone's increasing, not everyone, actually, that's incorrect, not everyone. Folks like you, well, me for sure, and others, we sort of still holding on to this idea in our head, this framework, this model for how markets are supposed to operate. And, I find myself questioning that. Like, I know at the end of the day, reality does matter. There is some kind of reality. I do have a much more sort of relativistic sense of what reality is and truth is at bottom. But fundamentally, there is a reality. But, if the Fed is really, and so I guess it really comes down to, can the Fed sustain asset prices? Can it do it? If it continues to make all of these new announcements, eventually, if it just decides to buy stocks right out, is that going to be enough?
Yeah, I mean, the scary part is that we're on the path to become Japan, which owns 60 or 70% of their ETF market now already. And so, they're responsible for price discovery in the markets there. They're responsible for, liquidity. And so basically they've taken over the market. It feels like with the Federal Reserve stepping into buying corporate credit. I mean, they've already announced pretty much everything that you could think of in response to the COVID lockdown. They've thrown an emergency funding at it. They've sent checks out to the people. They said they're going to buy corporate credit. They're supporting the high yield market. Today, we just got $1 trillion stimulus plan discussion. I mean, what's left? And so that's where I start to believe in Stan Druckenmiller's latest comment, like, by his calculation, the Fed can't have everyone's back. And so that's what you start to think could be either it's going to be a case where they inflate the S&P into the stratosphere and it's going to work monetarily, or the whole credibility game is going to come apart. And I think the fact that you see Jerome Powell on 60 Minutes, definitely an indication that they are concerned about the credibility of the whole thing coming apart, but that they stay with their plan. They keep throwing these superlatives at you. They're going to come at you with forceful, proactive, aggressive action until they're confident that the economy is recovering. And, it's very, very hard to fight that type of rhetoric when you see their balance sheet expanding to now levels not seen before. And you're saying, okay, we just went from 4 trillion to 7 trillion. Point me at something that would stop them from taking it to 15 trillion. And what is anybody going to do about that?
So one of the things that I think can bring this to an end or to fundamentally change the regime we're in is a political crisis. And I think that we've seen hints of that with the riots across all the major cities.
Yeah.
If Trump were to order in the U.S. Army to a city like New York without the approval of the mayor or the governor, I think that could or would itself be a political crisis or could lead to one.
Yeah.
I think if North Korea moves into the demilitarized zone, there were some reports about that yesterday or 2 days ago. If China conducts a cyber attack against some critical U.S. infrastructure, there are so many ways in which this could go south. But all of them would be in the real world, right? Because we've divorced the markets from the real world. So now the real world has to assert itself, just in the same way that populism through the election of Donald Trump in 2016 was an assertion of popular will through some large section of the population over the controls of government, right? That's what populism is. I think something similar is more likely to happen today than, let's say 10 years ago, where the mechanism would have been through the marketplace.
That's a great point, Demetri. I like how you're thinking, because if you think about it, the thing that finally derailed the equity rally from 3,400 was as a shock that was exogenous from the market, right? It was not like part of a market shock, a blow up or anything like that. It was the black swan of coronavirus, so I would not be shocked at all if the sort of next linchpin event, and you definitely listed some really potentially big ones that are definitely non-zero probabilities, unfortunately, but I could see it coming from outside of the markets and really causing the Federal Reserve to have to sort of readdress how they're looking at things. But it would take something that big. It would take something.
Yeah, because the authorities are all focused on the simulation. They're focused on the map, right?
Yeah, exactly.
They're not focused on the territory. And they've mistaken, or they've increasingly just adopted the map as the territory. We don't really care what's happening in the real world as long as it looks good. And even our president has made similar comments, right? He wants the numbers to go up. He wants the markets to go up. But I think we're beyond a point where this is just my view, beyond the point where the existing system can fix this. I think that we're eventually going to see a New Deal type reform, which means massive regulatory overhaul, right? We've been living with a patchwork financial system that we've sort of cobbled together through deregulation and re-regulation since the early 1970s, since we went off of Bretton Woods.
Yeah.
As you mentioned, the wealth gap has exploded. We've used debt in order to paper that over. Robinhood's a great example also, right? So Robinhood pioneered, as I understand, this no transaction fee, kind of feeless brokerage platform. And this is kind of how we've approached everything, whether it's student loans, whether it is consumer credit. We've found other ways to lower prices in order to sustain the unsustainable, right?
Yeah.
So like they sell order flow increasingly, right, to generate the revenue that they need in order to make up for the loss of revenue that comes from not charging on transactions, because millennials and Zoomers can't afford to pay transaction fees, right? So you do everything you can to herd these people into the market and then shear them.
Yeah, it was certainly set up for that. I mean, I definitely have zero commission trading as something that's very high on the list of contributing to this speculative bubble, along with several other factors. But you actually alluded to one before when you talked about, regulation changing the markets, et cetera, et cetera. And obviously Dodd-Frank and the Volcker Rule have been massive changes for the markets. And I believe still a huge contributor to why they've changed so much. And, that they've contributed to that transfer to electronic and algo-driven trading. And there certainly isn't just one sign or one sort of visible thing that we can point at that's going on here. There's a whole confluence of events that are sort of spinning out of control, I could say.
So what would those be in your view?
Oh, well, I mean, I'm talking about the speculative bubble that's coming out of control. I mean, I think that this has been caused by, But what I mean is, what are some of the regulatory impacts of Dodd-Frank, for example, that have contributed to this environment? Oh, yeah. Well, I mean, Demetri, that was, Dodd-Frank came after the speculative trading that was going on at the investment banks, right? They wanted to eliminate the prop trading. They didn't want anybody taking risk with shareholder capital, and that made a lot of sense. So the Volcker Rule was really wound up targeting speculative trading, but what it wound up doing was shutting down the interdealer broker business. And what that did was no longer were banks able to carry inventory of securities on their books because they had higher reserve requirements and higher cash requirements, et cetera. And so therefore, if you don't have an inventory of something, you don't really have an axe to grind in the markets. And if you don't have an axe to grind in the markets with a position, then liquidity is clearly going to dry up, because you're not that natural constant bid for bonds where you would, where you would see value and buy them. And you're not a natural offer in equities here because you think it's overvalued and you would sell them. So, you've taken a major, major chunk of, what was an essential part of market liquidity away. And you've taken with that, block trading has gone away. And with that, you've had the invasion of algo-driven and electronic-driven platforms. So all of that to me is sort of one piece that stemmed out of Dodd-Frank and the Volcker Rule.
How much did the Volcker Rule and, not the Volcker Rule, but Dodd-Frank contribute and reserve requirements contribute to the growth we've seen in the corporate bond market, right? And now the Fed is coming in and they're bailing out the corporate bond market. So it's kind of like, well, if you're not going to bail out the banks, but you're going to bail out the corporate bond market, what did you really do to minimize risk? You transferred it from one part of the market to another.
Yeah, they're bailing out one party instead of the other party, right? It's like one or the other would be holding the credit, but they're deciding now that they're just going to bail out the actual company itself, then bail out the bank that's holding the credit that's going down, So it's become a really complicated game, and it's just they're increasingly bigger part of the market is the part that you don't want to see because that's just less free markets, right?
Yeah. So look, man, I would love to actually go back to this thing about political crisis and explore it a bit more with you, because I feel like this is one thing where we're both speculating. We're not experts. I don't know if anyone's an expert in this stuff, but there are obviously people that spend their lives looking at sentiment analysis, try to understand the zeitgeist of the political base. But I've sort of been really fascinated now for at least a year, maybe two. It started with looking at memes in the crypto space.
Yeah.
And that's really a stand-in for a sort of generational observation. These people that are on the younger end of the spectrum in terms of millennial, and also Zoomers, people in their 20s and early 30s and even younger. And the artwork that comes out of this community, first of all, it's really creative, it's really smart, it's really interesting, it's very insightful. Characters like Wojak in the crypto space, but there's a ton of this stuff if you go into like Wall Street Bets, this like subreddit. For listeners who aren't familiar with Wall Street Bets, Bloomberg did a feature on this. I think it was a cover story maybe 6 months ago or so, and it focused, among other things, on how they were using call options, or they thought that they kind of figured out this perpetual motion machine of buying call options through primarily Robinhood, right? Again, this brings us back to Robinhood's trading platform, but basically buying call options on stocks like Tesla, and then knowing that the dealer on the other end is going to have to buy the underlying stock in order to do that. And so they were all sort of trying to create a giant momentum play, kind of like it wouldn't be considered a cornering of the market. I don't know what the official term for that would be. When you sort of, your whole play is to just drive the stock up until there's just
they're just trying to run it in, man. I guess run in shorts and
just limit up
to cover. Yeah, it's that's the nihilistic attitude that you're speaking about, right?
Yeah, totally. I mean, no concern to fundamentals, just the price, nothing else matters. But I sense a sort of underlying despair and a quality of low self-esteem, because if you look at the art that comes out of this, and I might be off, it might just be me and my interpretation, but you've got these weird characters, the heroes in some of these meme stories are people with kind of living in their mother's basement and just buying stonks. The way they refer to stocks, they call them stonks, right? And the US dollar, they call it a shitcoin.
Yeah, it's that real desperation angle. It's just what it seems like to me. It seems like, they're desperate to try to get onto this, S&P wealth creating American dream as it was, and they can't figure out how to latch onto it. And, they're probably coming out of school with a lot of debt, and they might
they've been priced out of it. Exactly. They've been priced out of it, right? So it makes sense for them. Why would they work their whole lives and save up? That's not going to move the needle. They've got to bet big.
Yeah. Yeah.
Right? They've got to put their stimulus checks in and leverage it.
Yeah. Yeah. That's the attitude. That is the attitude right now. I mean, it's amazing to me how many people are flocking into this market that I'm hearing about, sort of at what I'm considering might be, somewhere around the top of this retracement rally. But when I've got a couple of interns working for me. And I've got one of them sharing with me that they've got a chat room of a text chain that has about 50 college kids in it, all sharing their Robinhood trading ideas and sharing their Robinhood P&L screenshots. Yeah, essentially what it's done is opened up another room in the casino. It's just one that hasn't been there in a long time or hasn't been there ever because of the conditions we have with no sports betting and, other parts of the economy and other parts of people's leisure space actually shut down. So it may be temporary, we don't really know yet. We don't really know if people are going to take their ball and go home once sports gambling starts opening up again and the sports teams get going. But I don't know if they find it comfortable here. Money always goes where it's treated best. So I would imagine they might stick around until they get rinsed. It's going to be really interesting to see it work out.
Yeah, and again, like from the political angle, because there's also an interesting thing that I would like you to comment on, which is maybe explain to someone like me who's tried to understand what it means that Robinhood is selling order flow to HFT shops that are on the other side of these transactions with their customers. Is this kind of similar to how Facebook sells behavioral data or uses behavioral data in ad platforms to match advertisers with the users? So if you're not the customer, you're the product.
Yeah, I essentially think that is it. Demetri, they've taken away, trading commissions are at zero. The trading commissions were what used to be used to pay for, the services that were necessary that came along with the execution business, whether that be added through, added execution services or research or whatever came with it. But that's what your commission dollar got you. And so now that they're not collecting commission dollars, they have to figure out how to pay for those services within the Robinhood business and pay for their infrastructure. So they literally sell their order flow to high frequency traders who I think are happy to receive it and happy to pay for it because, for two reasons. They probably front run the pants off of most of the orders and make, small incremental profits on each one. And then they're feeding all the information into their models and seeing, what these young, crazy risk takers are going into. They're all running into the airlines and into the cruise ships and things like that. And I'm sure that's really valuable information to, firms like Virtu or Citadel or some of the other.
Well, Citadel makes up more than half of their order flow.
Yeah, that makes sense.
It's like 65% for securities listed on the NYSE. So Tony, listen, I'm going to move us into the overtime. I really want to discuss this political angle, man, because I think the riots that we've seen are part of this. Young people, we know this from the last crisis. A lot of people never really got out of the last crisis. They moved back home. They were never able to really get their careers going.
Yep.
And now, we're shut down. I mean, Beijing, by the way, today, I said we're recording this on Tuesday morning, June 16th. Beijing is shutting down again. They're shutting down travel. I don't know if you saw this.
I did. They got more cases.
That's super scary.
Yeah, it is. It is. It's
because they're like the leading indicator.
I know. And the problem is that they haven't been dealing with it from a perfect integrity place either. So, we're dealing with the CCP here. We're not just dealing with another country. And so God knows what they could be up to be, sending out disinformation, protecting themselves. Yeah. Like, who knows? It just gets scarier and scarier the more you peel the onion back.
Totally true. But also here, right? Like, no one trusts anyone.
No.
We are in a point where we need government, right? Another thing I've said for a while now, for years, I've said that I'm bullish on governments, and I continue to be bullish on governments. But what I mean by that is that we're heading into a time where we are going to need and rely on that kind of sort of large actor level solutions to societal problems, whether they're able to solve them or not. And if they're not able to solve them, and we just end up, descending into some sort of totalitarian
mess,
dystopia, right, which is the worst outcome, that if Donald Trump sends the U.S. Army into America's cities, let me tell you what I think. Again, I don't know. I don't have a crystal ball. I'm not worried that Donald Trump is going to take over America. I know that's been like a huge, concern on the left. I'm not worried Donald Trump is going to become a dictator. I'm worried that if Donald Trump were to send the army into America's cities, he would immediately lose control of it because these guys would come in and they'd be like, this is a shit show. Let's do some kind of a coup with the, quote, deep state or some other political actors. And then we're in a whole nother world of shit. And all this time, we're America. We have the biggest army in the world. We have how many thousands or tens of thousands of nuclear missiles? This is not something to fuck around with.
No, this isn't. No. With the way the political atmosphere has been, going, I agree with you. I don't think that Trump is one of those guys that's looking to stay in office or actually become a dictator. But I do agree that he could make a decision that is abominably stupid enough to create an utterly toxic situation here. Like you said, like sending the military into anywhere would be an utter disaster. So we're going to see how he tries to play it, which will probably be, with a firm hand. But the thing is, he wants law and order, and the other side of the coin is going to do their best to keep this kabuki theater going on of absolute, oppression, and it's just going to get uglier. But the thing is, how do you sustain when you've got a safe zone in Seattle? How is this something sustainable? I feel like they're leaving it up there to be a model for other places to adopt, so that's what I think.
Right. So what is that again? They've because I was going to say our mayor, Bill de Blasio, hasn't helped the situation by being, pretty
He's
incompetent
terrible
with how he's handled security in the city. What's been going on in Seattle? Actually, you know what? Hold on. We'll talk about it on the other side. We're going to go into the overtime. For regular listeners, you know the drill. If you're new to the program or if you haven't subscribed yet to our audio file, autodidact or super nerd tiers, head over to patreon.com/Hidden Forces, where you can continue to listen to the second half of my conversation with Tony, including gaining access to the transcript of today's conversation, as well as to the rundown. Guys, the rundown this week is awesome. It's full of, not just quotes like I mentioned, but tons of links that are related to this. I did an enormous deep dive this weekend. I watched hours and hours of David Portnoy videos, so you don't have to. Although I think you guys should check out some of his stuff. It's hilarious. Spent a lot of time on Wall Street Bets, researched this phenomenon of Robinhood, and it's a lot of really good stuff. So if you're subscribed already, if you're a super nerd, check that out. If you're not, you may want to hop on the bandwagon. Tony, stick around. I'm going to move us into the overtime.
I'm here.
Today's episode of Hidden Forces was recorded in New York City. For more information about this week's episode, or if you want easy access to related programming, visit our website at hiddenforces.io and subscribe to our free email list. If you want access to overtime segments, episode transcripts, and show rundowns full of links and detailed information related to each and every episode, check out our premium subscription, available through the Hidden Forces website or through our Patreon page at patreon.com/Hidden Forces. Today's episode was produced by me and edited by Stylianos Nicolaou. For more episodes, you can check out our website at hiddenforces.io. Join the conversation at Facebook, Twitter, and Instagram at Hidden Forces Pod, or send me an email at dk@hiddenforces.io. As always, thanks for listening. We'll see you next week.